Welcome to Markets Now. I'm Michelle Rook with Scott Varlick with Quema Varlick. We've got a higher day going in all but the wheat market, and good to have you with us, Scott. Let's talk about this cattle market. Of course, an ugly start to the week, some limit down moves on the cattle line feed report bearishness. But boy, we've tried to recover here, and especially today, it's impressive considering some of the outside market news is pretty negative.
Yeah, thanks for having me. And yes, beginning of the week beyond ugly. That was
Yes, very ugly.
that was a wild ride. 675 lower, limit down on a fed cattle that day. I mean, that's stuff that we haven't seen before, and that kind of volatility. And I guess at record levels you're expected. So that's what we got drugged through was these, large sell-offs, liquidation, panicked hedging, trying to getting protected and really beat the longs up. Now to end the week on a stronger note here, and I feel like we got so beat up earlier in the week that maybe we've got some heads in the sand here yet, and cooler heads have prevailed finally as suddenly the cash prices start to lead us a little bit higher.
Yeah.
That's what's leading us out of here. Yes, we've got the weak outside market news. Dow Jones making some fresh lows on a chart right now. So, I mean, there's a lot of overhanging issues that are, making this market negative, but the cash live cattle is just hanging on strong. And now we're up to 185 in the South. We're getting, 2 to 3 higher in the South. It was some 183 in the North early, then some 184, now 185. So the longer we're hanging out in the week, that's getting a little bit better. And the fundamentals are kind of shining through and pulling us back up.
So that's not just bids, that's actual business that's being done at 185 in the South now?
Yep, some actual trade. Just got some alerts here in the last hour that's happening here. So mid-morning here on Friday. Excellent news. Usually when you hear some bids or a little bit of trade in the South, that's all you get. Well, that's it. I guess the South is done for the week. But the fact that we've raised it a couple dollars now from the start, just from yesterday morning, that's an excellent sign. So packers are still aggressively wanting cattle, pulling cattle ahead. I've heard of, during this harvest season in the North, you've got a lot of trucks tied up and packers are trying to pull cattle early. And there was a big struggle just to find trucks in some of these Midwestern areas too, just because it's that time of year where all the trucks are tied up, and especially with moisture coming in. So cattle are moving. Packer wants them. They're out there. The majors were even leading some of these higher bids yesterday rather than letting the regionals take the front, buy some higher, and then the majors come on. But it was majors leading some of this charge here yesterday and today.
Yeah, and you do have the bull spreads working. Commercial interests are obviously in there, so that's positive. The big key, though, Scott, is do we keep the funds in here playing and supporting this market?
There's been a lot of liquidation in this open interest in these cattle futures, and we get to some smaller levels and in this open interest, and it starts to act squirrely like this. The intraday moves can really take your breath away just how much it can move in a day. That's a large part because the funds haven't been heavily involved in taking a direction or taking a stance. We'll see if big up today kind of changes that. But I do like that we've got the first of all, we're trying to answer the question: are the highs in? Are we done? But for me right now, I'm looking at this saying, okay, the three things that make a market turn: you've got the basis, you've got the spreads, and then you've got the market. And we've got all those three items pointing to the upside right now with a nice positive basis cash over the futures. We've got bull spreads leading the charge, even though we were breaking. Front months were outgaining the back months, and even on the up day, still doing the same thing. So you've got the OCTs, FAB, those are the 3 months kind of leading the charge today. I love that. And in the triple digit screen, 380 higher right now on the screen as I'm looking at it at this second. I'm feeling like more seasonal trade. This is when we can kind of rally on into through December. I feel like we're back into that mode again, and we all had to wake up. Like I said earlier, we got a little lull to sleep just because we've been so beat up this week, and now it's kind of waking back up again.
Yeah, I didn't even need to ask you if you thought the party was over. I knew what your answer was going to be, so I didn't even have to ask you there. We have had a little bit of a correction in terms of the cash feeder market. We've had a bigger correction in the futures board. Is that done too?
We had a large correction in the futures, obviously, and now we're starting to see it show up in the sale barns. But But what I'm seeing is I'm seeing a lot of my customers, my producers, they're out looking now a lot harder. Things got maybe a little bit too high, and it was hard to swallow some of those prices, and your notes were getting tapped. And now that we've had this break in the feeders, I'm seeing guys out in the sale barn here getting a lot more calls, a lot more action, trying to find those buys. So yes, we've softened, but I feel like there's producers out there trying to get back in there and try to buy some. And for the northern sector, yeah, we can kind of, the farmer feeders can kind of get out of the field a little bit here with some moisture. And they might be diving into those sale barns here and looking for some purchases here as we kind of shift gears here and start to look to fill some pens. So I see a lot of interest coming in.
Yeah, replacements got pretty darn expensive for sure. Hog market, what do you think here? Couple of days of short covering as we're oversold, or is the market trying to bottom?
Maybe a short-term bottom here. I guess we probably got beat up enough where it could be a little bit longer, but I'm not looking for a large sustained rally here. We've got 2 discount to the index. That margin was getting pretty wide, and oversold factors that can pull it higher. So it's not a market I'm looking at thinking it's too low. I need to get in and buy this thing. And still going to have big supply to deal with. That's probably the reason why we had such a big break and got oversold. I mean, it's a well-known fact, the different, the large supply that we have here in this time of year, but just getting some recovery, got a little bit too low. It's going to need another story to push it up the next leg. We've got some cheap hog prices in China, and we see what the buzzword of China does to some other markets, and you're going to need that one to land on the hog market if they're going to get any further boost from here, in my opinion.
And let's also talk about the grains. Corn and soybeans setting back yesterday, despite the fact that we had some pretty decent export news, but we're back up today. Meals helping out soybeans, but we're back talking China rumors again, huh?
Yep. That was my segue. Going from hogs to the beans. So maybe I could be an interviewer someday, but I doubt it. But nice green recovery today, mainly led by the beans, and that's the reason would be there's just some rumors that China is really interested in buying some more grains here. They were going to cancel some of their Brazil purchases and move over to the United States. And it's kind of been in the works. They've been over here. They've been talking. They're interested in our beans and they want some, but just added a little bit more fuel to that fire. It kind of made it feel like it was maybe a little bit more real that, okay, this might really be happening. So market's getting a big charge out of that. And so I was kind of surprised coming in this morning to see them up that much. So you had to kind of dive into why. And that's the reason it looks like we wanted to be up nicely 20 higher here on the day. And we do have option expiration today. So that's going to add a little bit of volatility to the soybeans as we get out of some of these November options. But November sure is quite discount. There's a pretty big carry in the market, and it's getting a little bit tough for some of these longs to want to roll back if they want to. So that's a little bit of a struggle, that setup there. But for the farmers, that's good. There's some dangling carrots of higher prices out there.
Well, what's interesting about the China business that you talked about is we already heard yesterday that China had canceled maybe 8 to 10 cargoes of Brazilian beans for November shipment. We've been hearing that China's been short bought for November through Jan. So it's interesting what actually pops the market or when we finally get the market to recognize that. So
yeah, I wish I knew the exact detail that really shot it higher. But yeah, I think they just kind of keep extending it out. When it started to talk about through Jan, all right, through Feb, through into the first quarter, it kind of tails it out there a little bit longer. It gives us hope for down the road yet too. So.
And then corn kind of following beans here, especially after 5 down days, maybe just a little corrective buying there too, you think?
Yeah, a little corrective buying. I think we're just kind of getting through some of this harvest pressure on both of these grain markets here as a lot of grain has come to town. We've made big headway on our harvest, and now we're kind of at a standstill to finish off here with some of the moisture around. But we've got a lot done. We've had a lot of grain moved, so we can kind of maybe say, okay, maybe this is right around this harvest low. I think the corn would have been pressed a little bit lower earlier if it was going to make that dive to 450 or lower, or really have a dive bomb kind of effect on it. But so I think it's kind of laying at this price long enough that I think some end users are going to start to look in. I want to be covering some of those needs here. As we've gotten through harvest, we all kind of seem to agree, everybody I listen to, that yields were better than expected. So
I
I
would
think
agree.
that news is kind of behind us, that we've talked about that enough. So now we get to talk about some China and demand, and we really needed to turn that page, because I think if we keep the focus on the yields and start to figure out, okay, big crops can get bigger. And I think that'll be a weight on the market. So we need some of this demand news to kick in if we're going to take any further rally from here.
Yeah, and you'd think down at that 475 level on corn, maybe that is a good value level that we would see some end user buying. So hopefully that'll hold. All right, thanks for joining us, Scott Varlick with Crema Varlick. That's Markets Now.